Hello and welcome to the paid weekly recap for the week ending November 14th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and or the team at Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. If you need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll get into the recap of this past week. So the 10-year yield started to rally on Friday, got up to 4.14%. We're still within this range, really between 4 and 4.2, but recently between about 4.05 and 4.15. It's a very tight range, very pinned. One thing that may shift is if this market does start to see 10-year yield go higher and shift in economic projections as well as interest rate projections, we may see a further rotation within sectors and stocks for this broad market. And speaking of rotation, we had the S&P 500 starting to rally out of this expectation of a government shutdown resolution. And then the government shutdown resolution came and the market sold off as fears over AI growth and profitability continue to hamper the market and prevent it from going to a new all-time high. Palantir earnings of about a week and a half, 2 weeks ago certainly started that concern. And since then, we've had this overhanging concern that big tech growth isn't going to be sufficient to pull up the rest of this broad market. So the S&P 500 in particular on Friday looked weak. We tested below the 50-day moving average again, but did find support above the previous low from last week. All in all, this market seems like it's ready to fall, but every time we get close to falling and turning into more of a falling knife type situation, we inevitably bounce. Will that continue again this week? We will see, but we didn't make a new high on this bounce. We did set up more of a bear flag type situation where we didn't make that new high. And there is some serious concern for the market overall as a result. Tech, of course, a little bit weaker as that is where the AI focus is present. So tech actually did not hold above the previous Friday high, but did bounce back above it and back above the 50-day moving average. So we're still seeing buying, even if it's somewhat limited on these dips. It's not getting aggressive, not pushing us to new highs, and the market on the whole is not in a particularly bullish setup. It's overall very neutral. And then we had small caps, and small caps have been generally the laggard in this market for years. Had a nice looking trend building from August through October and started to fall off a bit as we got into November. Weakness is certainly there as we tested below the 100-day moving average and closed well below the 50-day moving average. Did not hold the previous Friday low, and small caps right now look broadly generally weak. So the market doesn't look particularly strong, but there are still stocks and sectors that are showing some strength in this rotation as we start to see buying of different sectors, such as energies, instead of the big, broad AI tech-focused buying in this market that we've grown accustomed to. Now, along with this, the VIX did spike back up about 23%, similar level to the previous Friday. It did close below 20%, which is a big psychological number, but there's fear. And along with that fear comes concern. And that concern means we're not pushing this market to new highs. Now, if we start to see a rally back towards highs, I expect to see this VIX drop to 15 or maybe even 14. But having a couple of blips here in the last few weeks make it difficult for the VIX to get too cheap. It may be cheap relative to realized volatility in the short term, and if we do recover to highs in the next week, then this VIX is actually underpriced relative to the market behavior, even in the bull case. All in all, this market is continuing to show resilience on dips, but very, very cautiously so, and not getting into the aggression of a big bull market, and that would be paired with a much lower VIX. Now, speaking of some of this momentum, we did see 2 trades this week in paid, and these were 2 trades that are hit by the tech pullback. So Amphenol, which is also in the tech space, looked ready for a breakout as we came into Monday, tested a new high. Tuesday, Wednesday still looked pretty good, held above the 10-day moving average, but then finally Thursday and Friday, we got the pullback. So with the broad market pulling back and tech leading that way to the downside, Amphenol did get hit, and it actually lost 6.2% in the on those 3-day window from um, the Tuesday open till the Friday close. I guess it's 4 days technically. So, 4 trading sessions, 3 days on the calendar. So 6.2% pullback was a big pullback for Amphenol, larger than normal pullback as we see some risk-off behavior, and that led to a 63% loss in the options, unfortunately, over those 3 days due to that pullback in the broad market and tech focus. Alphabet, very similar. Alphabet tried to break out, got very close to the highs, and then made the new highs on Wednesday morning, right after the open, before ultimately succumbing to the pressure building in tech, pulling down on Thursday and Friday. 4% loss for the 3 calendar days, 4 trading sessions. 61% loss in the 3 calendar days for the options as a result, very similar to Amphenol, unfortunately, due to the market pullback. Now, that doesn't mean that this is the end of this tech bull market, but we are looking at different sectors for the new entry potentials for this week in paid. Outside of tech, we have a couple of entry options that are coming in, it looks like, and those could be very exciting. And in the meanwhile, we also have our live trading room, which continues to perform well. All right, so we've had continued good performance in the live trading room, looking at opportunities for those sectors that are not necessarily majorly bullish, but at the very least finding still support levels. So those names and those ideas can still perform well. We're seeing some of that rotation into other sectors that can give some good performance. We'll be looking for some of those other sectors this week for paid. And if you have questions about paid or just the markets in general, I do urge you to come on, join us. We talk through a lot of different elements and what's going on in the markets, as well as a lot of education about options, technical signals, and artificial intelligence and how they can be applied to your trading portfolio. If you have questions outside of the trading room, you can always reach us via email. I'm Keith at yellowtunnel.com. Vlad is Vlad at yellowtunnel.com. Look forward to another interesting week for this market and hopefully an exciting one for the sectors that we are looking at as potential bull entries for paid. Thanks again, everyone.